I'm not going to join you. Yeah, I think I'm going to have to mute.
Okay. Yeah, sometimes that helps you, able to see.
Do you want our cameras turned on for the Zoom?
So today it doesn't matter because today I'm just lecturing and there won't be any. So normally though, you are going to want to be on Zoom because I'm going to be giving you poll questions to answer. I mean, if you're in class, I think you're going to, yes, you'll be able to, because you're looking at I think you're looking at my screen now. So it'll be okay, but you're just better off having it all set up there. Right, because
with the camera on or off?
Oh, no, you can, camera on, microphone off, right?
Okay.
So I think if the microphone is on, that resonates. So, somebody has it on, I think. So if when you are, in terms of microphone, you want to have a headset. For camera purposes, it's totally up to you. I mean, you're sitting in front of me. For me, I don't really care if you have your camera on or not. It might help the moderator, if you forget your name tag or whatever, it does have your name there, and, it might help other people to kind of start to recognize you. But in terms of camera on or off, I mean, for me, if you're sitting in front of me, then it's easy when I'm monitoring 10 rather than, So optional, I'll give you optional. Okay, so 16 out of 50 something. People are waiting till the last minute to log in, I think. Two minutes.
Would you like me to start the video feed for the classroom, or do you not have any preference either way? So if I turn this on, I think, yeah.
So what are you talking about?
So now we have the video feed for like inside the classroom.
Yes.
Okay.
Yeah, so I think if you have, so what you want to do is kind of drag this over. Right, and then I think now people on Zoom can see who's in the classroom, and then, because this is up there anyway for us, right? So this way we're able to see better who's actually here and participating. I can see their beautiful faces. Of course, with my eyesight, I should be holding that way over here. All right, well, it's 10:10, so I'm excited to get started. So let's get started. So while people are still logging in, I just want to start by saying any issues, right? So starting off by, I couldn't get the code to work, or I need help with something or other. Nobody has any issues so far? All right, amazing, but that's awesome. Did you get a chance to get in and read chapter 1? Oh, you guys are so good. Okay, so good. So if you looked at chapter 1, you know that there's nothing earth-shattering here. It's just a nice introduction. I have so many people, I'm spending so much time shifting people around and people moving into the classes and people moving out of the classes. So I'm not going to do any participation, so no poll questions or anything today until things settle down a little bit. But this chapter is a nice intro. It's like a big picture of everything that we're going to do. It gives you an idea, less of terminology that you want to know about. It's going to give you an idea of what the difference between what you did in financial accounting versus managerial accounting. So as I said, nothing earth-shattering, but it's a good start to kind of give you a feel of how you're going to be going. Okay, so chapter 1. All right, so what is managerial accounting, right? What did you get yourselves into here? So what you're going to see here, if you've read the chapter, is that the IMA has given you this long definition, and by the time we're done with this chapter, it's going to make so much more sense to you. Right, so let me just start off by talking about the IMA, the Institute of Management Accountants. That's the governing board of management or managerial accountants, right? So you should know, if I pique your interest, that I know you've probably all heard about the CPA exam, right? So that is what you would take if you want to be a public accountant. There is also something called a CMA exam, a certified management accountant. And the Institute of Management Accountants is the governing board for that. So something to have on your resume, you know, so when you finish this course and if you're thinking, I liked it, this is something I might want to do either for consulting or, you know, to be a CFO or whatever it is someday, something you may want to consider. So let's just kind of run through this formal definition, and then I'll pull out the words that we're going to talk about in much more detail as we go through the slides. So managerial accounting is a profession that involves partnering and management decision-making. Managers are constantly making decisions. That is a big part of everything that you're going to be doing in this class, right? How do you make decisions? Well, you're going to start off with devising planning, right? Planning. We have a ton of classes on budgeting, right? So planning is a big part of your job as a manager. You don't just come in and say, what am I going to do today, right? You have your goals and those are your plans. And performance management systems. The last half of our course is all about comparing those actual results then back to those plans and seeing how well you've done. And there's all kinds of management systems that are set up and accounting systems set up to give you that feedback. So that's the last part of this course, that performance evaluation. Providing expertise in financial reporting. So there's a reason why you had to take financial accounting. You need to know financial accounting, right? As a manager, you're going to be looking at those financial reports. And as a manager, you are also going to have to say, all right, I need to pick out what is relevant for me, not to make a financial statement now, but to make a management decision. So what you're going to see is you're going to be looking at accounting information, because 9 out of 10 times when you're looking for numbers and information, you're calling your best friend in the accounting department. But that's not you, right? You're not an accountant, you are a manager. And so you're going to get that information and you're going to have to pick through it and say, I know how you prepared this. You used GAAP, right? Those strict guidelines. Everybody uses those strict guidelines, but I'm not preparing a balance sheet saying this is how I should value this. I'm making a management decision. So you have to pull out what's relevant for your decision, right? So you need to know that financial accounting. And then you're going to control or assist management. So when I talk about control, that is your day-to-day putting your plan in action, right? In real time, how am I going to get those plans going on? So you're going to assist management in the formulation and implementation of the organization's strategy. Strategy is what drives every aspect of your business. Every company has a different strategy, and we're going to talk about that in this chapter as well. All right, sounds like a lot. Like I said, by the time we're done with this, these terms are going to make more sense to you. But if you want to just put this in a more simple format, basically what we're going to be doing if you're a manager, you're going to be looking for information that is relevant for you to make management decisions, right? It's all about decision making. Okay, how do you make management decisions? As I said, 9 out of 10 times you're calling your best friend in the accounting department. They have all the numbers. But numbers is not everything that you are concerned about as a manager, right? There's so much more. Yes, in this class, you're probably going to say, I choose this decision over this decision because I'm going to make more money. My net income will go up. But there's so many non-financial aspects that you need to consider as a manager that are just as important, right? You have your employees to think about. You have your customers to think about. You have your suppliers to think about. You have the community where your company is located to think about. You know, so there's so much more than just those financial numbers, right? You're going to process all of that, figure out what's relevant to make your management decision. Okay, so what you're seeing here is how I have my slide set up. So this is sort of something that you're going to go back, when you go back and you study, these are the questions that you should be able to answer, right? So I leave them up there, so I'm not going to cover, and I probably won't read them all as we go through, but by the time I'm done with the next section of my slides, it should make sense to you. So when you're studying and you come to these learning objectives, you're going to say, if this was an essay question, could I answer it, you know, and have all of the detail in there. So this is really just kind of up for you to say, all right, learning objective 2, I know where to find it in the book if I want more information, or this is a possible, you know, this is information or questions I should be able to answer. So the big one is, who are the users of financial accounting? Who are the users of managerial accounting, right? We're going to talk about the difference between the two. They are really different, right? So if you really hated financial accounting, you may end up loving this class. And if you loved financial accounting, you may hate this class. They are completely different. Financial accounting, I think about it as if you're a good memorizer, you're going to be good at this. Maybe I didn't love it, but I was good at it, right? Because it's all memorization, right? Basically, debit cash, credit accounts receivable, right? If you've got that down, you're going to be good. And you know what? Congratulations. You can be a bookkeeper now, and you can make $35 an hour. That is not what a CPA does. So if you're thinking this is, you know, I'm good at it, but it was okay, you have just scratched the surface. So I'm hoping that this course is going to show you, we're moving on to how you use those numbers now, right? So this is, I think, much more exciting, because your financial accounting, even though it was maybe a little tedious for you, or it was what you needed to do was to learn how to prepare financial statements, and everybody outside of the company is going to use them, right? External users is what we're looking at. It's the language of business, those financial statements. You want somebody to invest in your company, you hand over your financial statements. They are able to look and analyze them as you did in financial accounting and see the strength of that company. You want to go to the bank and get a loan? They're going to want to see your financial statements so that they can analyze your company, right? In this class, we are looking internally. You're the CFO, you're running the company, right? This is your business. So I'm going to take those same financial statements, but I'm going to say, all right, this is where I am now. Where do I want to be in the future, right? So it's much more exciting, I think, because you're all going to have different plans or different ways of getting there. I'm going to change the price of my product. I'm going to change the packaging of my product. I'm going to do this. I'm going to do that. We have a whole chapter of what if situations where you're able to, I'm going to show you how you're able to put all of those ideas into play to see which one is going to give you, at least plan-wise, the best outcome, right? So I think it's more fun. I like teaching it better. because even I think teaching financial accounting can get a little tedious and boring, right? And I always know when I'm bored, then you're like twice as bored, right? So I like this course because I think I get, there's probably 5 different ways of getting to a correct answer. So internal versus external, right? So when you are reporting and you are doing financial accounting, you're looking at usually a consolidated financial statement, right? So if you're Kellogg's and you are analyzing Kellogg's, you're going to pull up the 10K and there's the consolidated income statement. And you can do your ROI. I know you just did financial accounting where you did your ratio analysis and all of that. Great if you're trying to figure out whether you want to invest in Kellogg's. But if you're running Kellogg's, that financial statement is pretty useless to you, right? How are you going to look at that consolidated financial statement and make improvements? I need to break that down. Kellogg's is a parent company. They have all different divisions, right? They own Keebler, they own Yoplait. So what we're going to do, or what I'm going to show you, is a little later in the financial statements is the segmented income statements, where the managers are showing you, this is how we run the company. This is the financial position of Keebler. This is the financial position of Yoplait. And for whether you're an accountant or whether you're in finance or investing, that's really where I would go to see the future health of this company, right? So we are more interested in the detail of the individual segments, and you're going to see every company segments their company differently. Apple segments by territory. They have the Northeast and they have China, and then you're going to see companies like Pepsi. They segment by product line or division. They'll do the snack division and they have the beverage division, and then they break down the beverage division into, well, you already know the soda, but also they own Tropicana and they own Gatorade. So so they break it down by division, but you get to see how management of that company actually breaks it down and runs it. So you have a much better idea of how well the individual segments are performing. Time-wise, financial accounting is all about what has happened in the past, right? You learned how to record what has already happened. In this class, you're going to use that, but like I said, we're going forward with it. We're going to make improvements from where we are today. In terms of timing, your financial statements, right? The 10K is due once a year. You might have quarterly statements. End of the month, you're closing the books out. And then in managerial accounting, it's all about whatever you need as a manager, right? So no set deadlines or dates. No more gap, right? So you're going to be using those financial statements. Management accountants don't have to follow. When you pick and choose, this is relevant. You're not balancing anymore. And a lot of people get kind of thrown off by that. Well, how can you pull that out? And I'm saying, because I'm not preparing a financial statement. I'm making this management decision, right? So, like I said, if you are a good memorizer, then you probably liked financial accounting or did well. But in this class, you can't memorize your way through this, right? I can't tell you how many decisions, these are the decisions you're ever going to be presented with. It's more about terms and more about concepts, and you being able to take that concept and say, apply it this way here or this way in a different situation. So if you're good at if I would rather understand the material and then apply it, then you're going to like this class. But if you try to memorize your way through this, I'm telling you, it's not going to go well, right? So you really want to internalize and practice the different problems. Okay, the 4 functions of managers. Like I said, this chapter, so here's the learning objective. When we're done with this, you will be able to answer this question. What are the 4 functions of managers and how do they carry out each function? So this pretty much sums up everything that you're going to do as a manager. And this is got some of these terms are now tying back to that IMA statement, right? Starting with planning, then controlling, then evaluating, and then all the while you're doing decision making, right? So let's talk about these terms in more detail here. The first step is going to be planning. planning. You would start with strategic planning. Strategic planning is that long-term goal for your company, right? Usually 5 to 10 years out. Where is it that I want to be for this company in 5 to 10 years, right? So you have that long-term goal. That's done by top management, right? Top management understands all aspects of the company, all of the different divisions, right? The CFO of Kellogg's is looking at all and overseeing all of the divisions of Kellogg's. And also in terms of consulting, there are consultants that only do that strategic planning. So if that's something you're interested in, you would go in and you would help companies set those long-term goals. Once you have the long-term goals, then you're going to start to break it down. How am I going to get there 10 years from now? Then you have your operational goals, your budgets that are going to be set yearly, right? So now you have a yearly plan where you're going to be able to move forward to that 5 or 10 year goals. So your operational budgets are done by upper management or lower management. Some are done top down, where top down tells you this is what you should be doing this year. But usually what you're going to see is this is a great time to have middle management come in, because the division manager of Keebler probably knows Keebler better than the CEO or the CFO of Kellogg's, right? So to have that input makes the division manager happier with their job, more likely to accept that budget, right? So there's all kinds of positive outcomes by having these lower level managers come in and help doing these operational budgets. And they have a better idea of where they're going, right? So those operational budgets can be yearly, but then they're broken down into quarters or even monthly, right? So it depends on how much information or how much you want to be able to go back and control this. We're going to do master budgets, which are done on a quarterly basis, right? So I'm going to show you how all of that is going to work. And it's just great information because every company does this. And so I've had students come back and say, oh my gosh, my summer internship was just doing all of those budgets and I knew exactly where all, how it all fit together now. So all of this is really good hands-on. Example, preparing the annual budget, right? Or preparing the master budget, the quarterly budget, in order to help achieve those long-term goals. Everything is set up and broken down to get to that long-term strategic plan. Okay, controlling is the day-to-day operations to ensure that the processes operate as required, again, to hit your strategic goals, right? So everybody is going to be doing different things depending on the different strategies. So who does controlling? Everybody does, right? It's your day-to-day operations. So the lower level managers, the workers, everybody has the plan where they are doing what they need to do on a daily basis to hit the monthly goals, to hit the quarterly goals, right? So done in real time, the sooner the better. The example I'm giving you here is checking a sample of products to determine whether they are in compliance with specifications, right? So think about maybe the strategy of Tiffany's, right? Tiffany's, I think, was Tiffany's just sold? I think Tiffany's may, well, I don't know if they actually, the sale went through, but Tiffany's strategy is to deliver the highest quality possible, right? You pay top dollar if you're buying Tiffany's. So the strategy of Tiffany's is to deliver high quality. So I'm guessing that day-to-day control is analyzing every single product or every single unit. It has to be the best it can be, right? So in terms of every day, you're probably doing quality control in every single thing that is going through that company. So control is real time to hit, again, that long-term goal, that long-term strategy. And then evaluating, right? Evaluating is comparing your actual results to those planned results. Now that it's the end of the year, or now that it's the end of the quarter, let's see how well we did, right? You have that budget, you had your goal, and now you have your actual. So now you're going to be able to compare the two and see how well you have performed, right? So this is performance evaluation. So the example I'm giving you here is reviewing the regional sales history for the year during the sales manager's annual performance evaluation. He was given his goals or helped to contribute to the goals that he was going to make. And then at the end of the period, compared to actual to see how well they performed. Okay, so another big part, and like I said, a whole half of this whole last 3 chapters to this course is all about this evaluation. How do you do it? How do you do a fair evaluation? How detailed do you need to be? So there's a lot involved in this and a lot of great things that come from that feedback as well. And then, of course, all the while, you are making decisions through this whole process, right? What is decision making? It's choosing a course of action. Do I choose A or do I choose B? And again, there's a whole chapter on decision making. You are, and I cannot, as I said, show you every decision you're ever going to see as a manager. But in the decision making chapter, I'm going to give you tools and approaches and some of the big decisions that you're going to be presented with, like, do I want to make this part or do I want to make, buy it from somebody else, or special orders, or what price do I, so there's all kinds of decisions that you're going to be making. What I'm going to do is I'm going to give you, again, very general approaches, and then you're going to go and you're going to practice it in lots of different situations. Example, dropping a slow selling product from the catalog, right? Do you want to drop it? Do you want to keep it? We're going to do that decision making. Will net income go up or down, right? So that's basically the approach. Okay, think of yourself as the manager in your approach to the managerial accounting course. What is your plan? You're thinking your plan is the same as everybody else's, but I doubt it, right? Some of you are thinking, I'm a business minor, I hated accounting, I just have to get through this, it's a requirement. I'm really hoping I get a C, right? Or some of you are thinking, this better not ruin my 4.0 average. I am putting every effort I have into getting an A in this course. Or I think I like accounting and this is going to be my major, so I really want to make sure I do well here, right? Everybody has a different plan, right? So if your plan is to get an A, then you have to control your day-to-day operations. You don't magically get an A, right? So how are you going to do that? What are you going to do day by day? Well, you can, after class, copy over your notes, right? I'm going to go through all of that again. Or before class, I'm going to go through the slides. Or I'm going to make sure before class I've read that chapter before we discuss it, right? I'm going to go into Wiley and do the adaptive practice right after, or do my homework right away so that I make sure that I'm good with what I just learned, right? So there's all kinds of ways that you are going to go about day to day to make sure that you're going to get or achieve the goals that you have set for yourself. How do you evaluate your performance? Well, you could wait until the first exam, but you might not be happy with your results then, right? So there's all kinds of ways you can evaluate. You can, like I said, the adaptive practice is going to throw, I think I know chapter 1, go in and do the homework. Pretend it's an exam, right? You have unlimited attempts. It's safe. Study for chapter 1 with all these, no rocket science here, but terms and different approaches, right? So pretend the homework is an exam and then see how you do, right? That's a pretty safe way to do this. Do the adaptive practice. They'll throw all different situations and different kinds of questions at you. How well do you really know these terms and these topics? So you don't have to wait until that first exam. If you do wait until that first exam, that's definitely a way to evaluate your performance. And then from there, if you don't like where you stand, then you go about and you make your improvements. Right. What decisions will you make all along the way, right? You're going to be faced with decisions, right? I want to copy over my notes, but I have this other course that I have, or my homework isn't due here, so maybe I'll just skip it today and go something else, right? So you're going to be faced with these decisions, and then you just have to make sure that you are doing the right ones to hit your target total. Strategies, right? So that was in that beginning definition of managerial accountants, right? Different strategies require different information. So just because you think I'm the best manager of an automobile factory, you may not know how to run a cereal manufacturing company, right? So strategy depends on the company, and then also the information that you're looking for to make decisions are going to be dependent on that strategy. So again, here's your learning objective. Can I answer these questions when we're done with this section of the overhead? How does information assist in achieving corporate strategy, and how do corporate strategy influence the selection of information for decision making? Okay, so let's talk about strategy. So an organization needs to set strategies first, right? What are my strategies? What are my goals here? And then determine the information required to monitor or achieve those strategies. Different strategies require different information, right? So if you are product differentiation, that would be like Tiffany's, right? Tiffany's has been able to differentiate themselves because they have very high quality, right? So again, if you're Tiffany's and you are not selling to a lot of people, you may want to just kind of make sure that you're going to be reviewing customer satisfaction, right? So what information do you want to know? Yes, you're doing all of these quality controls, but I want to make sure the customer is recognizing the efforts that we're doing, right? So that's product differentiation, but you know what? A company like Walmart does not operate like that. That's not the information they're going to want. Walmart doesn't really care about the quality. Their strategy is we get our money because we do huge volume in sales, right? We sell at a low price. So the information I'm going to want is look at my buyers and making sure that they are making good deals and they're getting the best prices, right? So your strategy is going to depend on you as a manager making sure that you're looking for the right information. Market share can also decide what strategy you're going to be using, right? If you're trying to build your strategy, build your market share, then I'm probably going to be wanting to look at my sales and making sure that they're growing, right? So I'd be interested in that. If I'm looking at holding on to the market share, I'm not looking at new sales, but I'd want to make sure that the existing customers are coming back. You know, so it just kind of depends on what it is that you want. Okay, the balanced scorecard. So the balanced scorecard is fairly new. It was developed in the 1990s, and I know I say fairly new because I didn't learn it when I was in school, but you weren't even born yet, so that's kind of sad, but that is the truth, right? So it was developed by a professor at Harvard, and it's kind of like a proactive approach now to making financial gains. So the balanced scorecard is really kind of a set of performance measures that are derived from and support your strategy, and they're not financial, right? It's non-financial. I kind of like to think about this as like a hypothesis. This is what I think is a way that will improve my company, right? So if you would start probably with the learning and the growth, right? If you're running a company, you are never going to sit back and say, this company's the best it can ever be. Right? There's always different ways that you can make improvements, that you're going to maybe grow the company. I've seen companies, when they're trying to get ideas on how to learn and grow, I've seen them ask their employees. You know, I'm thinking about a drugstore. They did a contest. You know, how do you think the customers are going to be satisfied better, you know, with this particular store? And who else knows the customers? They're the ones dealing one-to-one. What a great way to get some ideas, right? So you're constantly looking, learning, and growing, but then how do you implement that, right? So you've got this great idea. How do you make sure that the plans that you want are going to be implemented, right? So all of this, remember, is based on strategy. Another company. How about TJ Maxx, my favorite store, right? So TJ Maxx, what's their strategy? Their strategy is to sell those brand names for less money, right? And when they started, they were more like an Ocean State job lot. They would go into the department stores that were closing and buy up those brand names at a low price, and that's what they offered. And so when you went into that store, it was kind of a hit or miss. Maybe they'll have my size, oh, that's, that's nice, but it's only in this. They don't always cover, carry Calvin Klein, and I really like Calvin Klein. So you didn't have people coming in, your customers coming in and trying there first, right? So what they said was, how can we get our customers to come in and come here before they go to that department store? So they said, well, if they know I'm going to, an event and I always buy Calvin Klein, then I need to have Calvin Klein there in every single size. And so what they did was they told their buyers, you need to see if you can negotiate a deal with Calvin Klein. Instead of going to that department store and buying the clothes out, we're going to do such volume. They need to give you that price. We still have to hit our strategy. And they're able to do that now because they do that huge volume. So now I want Calvin Klein. I know that it's there. Tommy Hilfiger, I know that it's there because they just have that power now that they can buy it at a lower price, right? So how do you get that? That's the internal business process. Usually you tie that to performance evaluation. I tell the buyers, I want to see you making these deals, right? When it's time for your performance evaluation, if you're able to do that, then you get your bonus. That's a great way for management's ideas to actually get implemented. And it's all for nothing unless that customer recognizes the benefit, right? So if you start to see that customer coming in first, and it's one of the only retail stores that people just actually will go into the store, right? Not online. They're always crowded. So the customers, I'm going to say, recognize that benefit. And then if they do, then you're going to see your financial gain. So all tied to the strategy, making improvements. It's just a proactive way instead of saying at the end of the year, did my net income go up? Okay. The supply chain. So the supply chain is a network of trading partners, customers, and suppliers. So what you're going to see is companies rarely stand alone by themselves. They are always or usually dependent on other companies in their supply chain. This is great to point out because I think your textbook does a nice job of showing the supply chain as well. You're going to see, we're going to start off with Universal Sports. It's a retail company that sells sporting equipment. And then we're going to move in when we get into chapter 4 in our nice financial accounting information. We're going to move into the manufacturing company, C&C Sports, that makes the jerseys and the jackets that they sell to Universal Sports. And then as we move on, we're going to go to Yarn Centrics that makes the yarn that they sell to C&C Sports. So we're going to be moving down the supply chain. So as I said, each one of these companies are dependent on each other, and each one you're going to see is going to have to get their raw materials. They make what they make, and it may not be going directly to the customer. It could be going right to the next business in that supply chain, right? And then also we're going to look at, sometimes you have something called vertical integration. Maybe there's a yarn shortage, so you might see the bigger company buying those, lower in the supply chain to make sure that they're going to get the yarn that they want. So companies will do that as well, understanding that they are not standalone. They are dependent on others. And I should tell you, sometimes these supply chains are pretty long, right? So thinking about you and your textbook doesn't apply if you got the ebook, but if you got the physical book here, think about the process that it would take to get that book into your hands, right? You have the tree farm, then you have a logging company cutting down the trees, then you transport the trees over to the paper company, then you have to go print the book, and then the book goes to the bookstore, right? All of these, like I said, it can be quite a long process, something you don't even think about when you are in a retail store picking something up. You're kind of like the final end to that. Inventory strategy. You probably didn't know that there was a strategy for inventory. So this is, again, well, I would say this I did learn in school, so it's not that new. But it used to be when manufacturing started, it was more of a push inventory than a pull inventory. You know, manufacturing companies just made the inventory and there it all was, and you would come and you would pick it up. And then as you already did financial accounting, so inventory is expensive to hold. It can become obsolete depending on what the inventory is. And so just-in-time inventory was developed to kind of protect you from that. It's a pull system instead of a push system. Somebody orders what they want and then you manufacture it. And so you don't have the ability or a long time for it to become obsolete, and you don't have to hold it, and you don't have to pay all of the money to store it. It is definitely, it keeps your assets down. If you're thinking about the ratios you did, ROA, ROI. So it's just overall a good process, but you really have to make sure you have good quality control when you are using a just-in-time inventory system, right? Think about an automobile. It used to be, well, actually, if you wanted to buy a new car, you may go to the dealer and you might find what's on the lot, but there's not a lot there. Usually you have to order what you want, and then it takes a month, maybe 2 months or 3 or even 4 in order for that car to get to you. Well, if that car has problems, your customer is not going to be happy if they have to wait another 4 months, right? So you better make sure that what you're producing is good if they're waiting for it. ERP systems, right? So this is, when I think about ERP systems, I think about Oracle. It's systems, IT or information systems connecting the entire company. And Oracle is sort of known as a company that does all of this. You know, the idea here is you don't want your accounting department to have its system, and you don't want your sales department to have its own system, because you have no idea, you know, what's happening. There's no big picture here. So Oracle sets up systems where they are all connected so that you as a manager then are just able to make better management decisions, because you're able to see how things are happening within the entire company. You know, think about the purchasing department, right? So the purchasing department is going out and they're trying to buy materials, and they want to negotiate the best price that they can get. So they can look at last year's sales and say, I'm going to be able to buy a ton of this. I'll be able to negotiate a really good price, right? So they're able to look at those projected sales and then go in and get the best price. So it's just not a good idea to have those little standalone systems, and more companies are moving into that connection. Right, and the last part of these slides are the ethics. Right, so why is it important to have a code of conduct, and how can employees' unethical behavior affect an organization? Right, so what is ethics? I know you all took SM 131, right? So what is ethics? So it's knowing right from wrong and then doing the right thing. And I'd like to add to this, when nobody's looking, right? Because everybody does the right thing if somebody's looking over your shoulder. But when nobody's looking and you're doing the right thing, that means you are an ethical person, right? So ethical behavior does not necessarily mean it's illegal, right? So if you're doing something that if you're just saying, well, it's not illegal, it still doesn't mean that it is ethical. But illegal is unethical, right? So it doesn't go both ways. Unethical behavior can result in catastrophic results. And you see it all the time, right? It's so easy on the outside looking in to say, oh my gosh, you had that big spill. Why did you wait 2 weeks to, call somebody to pick it up? But when it's you and you're thinking, oh my God, I'm going to get fired now, and they're going to shut me down. It's just that instinct that I better not, disclose this, or I need to figure out what I should do. But it can have catastrophic results to the company. Top managers in the organization must model ethical behavior. So if you're in top management and you're doing things and people are watching you that are a little bit shady, you're setting the tone for the entire company. Right? It reminds me of my son is a captain in the Marine Corps, right? And he always says that he has, his men, and he said, I'm responsible for everything they do or in everything they fail to do. That's what he says. It sounds like a Marine, doesn't it? But that's exactly true. If you're in top management, it's not just you. You are responsible for everybody below you. You really have to set that ethical model if you want that corporation to follow and actually be ethical. Okay, and now we're back to the IMA because they have codes that they want you to follow. So the overreaching principles, they make sense, right? So the IMA is telling you if you're a managerial accountant, we want you to be honest. That makes sense. We want you to be fair. We want you to be objective, and you should be responsible. But more detailed is what they talk about with the 4 standards. And actually, case number 1 is an ethics case. And I'm going to be asking and looking to see that you come back here and kind of talk about this because this is a little bit new, right? In addition to SM 131, are you able to tie these 4 standards into this ethics case as well? So as a manager, competent, confidentiality, integrity, and credibility. So these are the 4 standards. I'm going to talk about them all in more detail now, but this is really what you are responsible for thinking about when you're talking about the ethics now in this course in the IMA. All right, so let's talk about competent. How are you a competent manager? Well, just because I passed the CPA exam 20 or 30 years ago doesn't mean I still know everything, right? So you have to maintain an appropriate level of professional expertise. I have to do continuing education. I'm constantly looking up new pronouncements, right? FASB did not stop when I graduated. So you need to maintain that appropriate skill level. You need to perform professional duties in accordance with the laws, the regulations, technical standards, which means you need to know the laws, the regulations, and the technical standards. All right, so in addition, well, I'll hold off on that. Well, no, I'm going to add it in. So in addition to knowing all of this, competence also means to let people know when you don't know something, right? So you are not competent if you're thinking, nodding to somebody thinking, I have no idea what Sarbanes-Oxley is, but okay, right? So being competent means that you're also able to say, you know, I don't know that, or I don't know that pronouncement, or I don't know that standard, but I'll review it and I'll come back and check in with you. And then again, providing your employees or the people below you with accurate, clear, concise, and timely manner of everything that you know, right? You're responsible for everybody under you. Okay, confidentiality. Keep things to yourself. Sensitive information should not just be thrown out there, right? Keep information confidential, except when disclosure is authorized or legally required. Okay. Inform all relevant parties regarding appropriate use of confidential information. Again, your employees should understand this, not just you. And then refrain from using this information for unethical or illegal advantage. I think about, well, for me, I would never be in the elevator talking about Caroline, right? While other students were around. You just have to keep that information to yourself. My brother happens to be in a top management position at Pfizer, and I'm thinking about how he broke little confidentiality, because he's been giving me like the lowdown of this, the vaccine since its inception, right? We're working on this. We have this new team. We're going to be doing this. And as a chemistry major, so he's telling me how it all works. And, you know, and he should never be telling me this. I mean, I could say, woohoo, I'm going to go buy Pfizer stock. Should have, right? But that would be an unethical practice. So he really should have kept that to himself, especially where the consequences really could have lost him his job, right? And the same thing, he could not go out and should not go out and take advantage of what he knows either. Integrity. So integrity is an interesting one This is conflict of interest. And when I say conflict of interest, I mean real conflict of interest where you are intentionally putting yourself in a position where you can benefit, or it just can be an apparent conflict of interest. So I'm thinking about, again, I was doing some work for a hedge fund in Boston, and I think about the board of directors, right? So the top CEOs, a lot of these people are on board, all different kinds of boards, right? And you'll see people are going to ask you and pay you to be on different boards. So there was this hedge fund, they were looking for, well, I don't want to throw anybody under the bus. Yeah, it was a dean, wasn't our school, but it was a dean in Boston that they asked to be on this board of directors. And of course, when you do this, you go through a whole series of questions and paperwork to make sure there aren't conflict of interest. And he said, no, I'm good. I'm all set with this. And then the auditors, when they came in, saw that he was on the board of directors of Ernst & Young that was auditing, you know, so even though he was thinking, I'm on so many, I don't even know what I have, that's an apparent conflict of interest. He could have, you know, asserted his, you know, his weight to say, let's give them a clean opinion, right? So even if that isn't true, if it's apparent, it is a problem. You can't be or have an apparent conflict of interest, right? So you really have to constantly look at what you have, right? So as I'm telling you, regularly communicate with your business associates. Are you dealing with this company that I just bought stock in, right? So you need to make sure, even if you're not doing it intentionally, if somebody looks at it and says it could be, then it's a problem for you. Okay, and then credibility, another time here. Credibility is disclosure, right? So if you are credible, then that means people are going to believe you, they're going to trust you, they're going to believe that your company is a good, ethical company. So when I talk about disclosure, communicate information, communicate, right? It's all about disclosing, communicate. Provide all the information, especially if that information is going to cause an intended user's understanding of the reports or change their actions when they're looking at your reports, when they're looking at your recommendations. Again, report any delays, right? You don't want to hold back. I think about like Target when they had their breach of the you know, the credit card. They waited a month, and in Wall Street Journal, that's the first thing that came up. Why did, you know, a month later, all of that information was out there and they didn't know it, and they could have, you know, brought it, you know, they could have done something about it. So you just want to disclose, right? And it's hard to do. I know I was working for a company that had a spill. It was an automobile factory in New Hampshire, and they spent weeks trying to figure out what to do with the mess in the back, you know, of their factory. And then, you know what, in the end, the EPA ended up shutting them down. You know, so I don't know if they could have, you know, improved it immediately if they had disclosed it, but it's just disclosure, credibility, be credible, disclose. You can't go wrong. Hard to do sometimes. In the end, it's going to come out, right? Okay, so that's chapter 1. Chapter 2 next. So chapter 2, we're going to get into some nice managerial accounting, predicting costs and things like that. You're going to notice that there is a financial accounting review. Oops, I'm skipping that. Somebody has their microphone on. Yeah. But so I'm skipping that until we hit chapter 4, because I have, I think, 3 people that are taking 221 along with 222. And I don't want to freak them out thinking that I don't know how to do the matching principle or all of that. So I'm going to wait until we actually need that in chapter 4, and I'll do that first, and then we'll do manufacturing accounting. Okay, so see you Friday.
So is the homework to read chapter 4?
2.
2? Okay.
Yes. 2.
Thank you.
Thank you.
Thank you.
Maggie. Thank you.
Yeah.
Professor, I have a question. Because if you get like a tutor for this course online, can you show him the slides or?
Yes. so you know what? If you want a tutor for this course, the TAs have just come up with a schedule. There's going to be somebody available to tutor you every single day, including Sundays.
Okay.
So, so if you're going to pay someone, I really think you should probably go to try internally first, because you're going to get students that are going to be tutoring you, like I said, that just took the course and all got A's.
All right. Sounds
So
good.
I would go that route first. But I don't mind if you do an outside tutor, if you show them the slides.
All right. Thank you very much, Professor.
Yep.
Hi, Professor. Oh, sorry, can you hear me?
Yep, hi, Mia.
Hi, I just wanted to introduce myself because I wasn't here on Monday, but thank you so much for letting me switch into the class.
Sure.
And
Yeah, so make sure that you look at the syllabus and like all of the participation, because I know you were coming from Saban's class, right?
yeah.
Yeah, his approach is a little bit different from mine. The grading is a little different from mine.
I saw that on your syllabus there was an introductory video that's 5% of our grade. So I did that for Professor Saban's class, but do you want me to I guess once I get access to the E1 course section, can I just upload it then?
Yep, upload it again.
Okay, great. Okay, and then if I don't get access to it by tonight, you said I could just shoot you an email, right?
Yeah, it should. I mean, it just takes them, I hate to add because then it's double and then I have to remember to remove and it makes things a mess. They have been really good with that new form as soon as you send it to me. So that's why I did send you the syllabus and the other tabs. So I think you're probably in good shape. But if by the end of tonight, you should be able to get in and like I said, you already have access to the book, read 1, 2. But yes, let me know if there's a delay more than a day.
Okay, sounds good. Thank you.
Yep.
Hi, Professor.
Hi.
I was wondering, you mentioned last class that sometimes we can go to different sections, right?
Yep.
And we need to shoot you an email before.
Yep.
But for example, for me, on Friday, it's much better to go to 9 a.m. class. And is there a way if every Friday I go to 9 a.m. or I need to send you an email every time before the class?
Okay. No, that's fine. Send me one email because people are just kind of moving all around now. I haven't even finalized a roster, but if you just send me an email, wait another week, and then I'll put you on both rosters.
Oh.
So that way the moderator will be able to give you credit. Are you, so the only issue is that if you're going to come into the classroom, it can only be during the section that you are registered for.
No, I'm in Moscow right now. It's just yeah.
Oh, yeah. So you're not coming in. So yeah, you're fine.
Yeah, maybe a bit later in the semester I will.
Yes. Okay. Yes. So you're good.
Thank you. Have a good one.
Thanks, you too. Oh, thank you. Yeah.